Today, we're diving into some newly released TradingView indicators that have shown incredible accuracy in spotting market reversals. If you've been searching for the ultimate strategy to identify perfect buying opportunities at low prices and selling points at high prices, these indicators are your best bet. They come with user-friendly interfaces and can be applied to any stock or currency without hassle. In this video, I'll walk you through how to make the most out of these tools, plus we'll run a quick backtest to prove the power and accuracy of the system. Whether you're a complete beginner or an experienced trader, these indicators will supercharge your market analysis. Before we get started, don't forget to subscribe to my channel and hit the bell icon so you never miss out on future videos. Now, let's jump into these trading indicators. To get started, head over to the indicators menu and search for LuxAlgo supply and demand daily. This indicator highlights key supply and demand zones on your chart, helping you pinpoint potential support and resistance levels. These zones are based on market data from the previous day, giving you reliable price levels to watch. Supply zones show where sellers are ready to exit, potentially causing prices to reverse downward. On the flip side, demand zones highlight areas where buyers are ready to step in, potentially pushing prices upwards. The beauty of this indicator is its ability to show the evolution of supply and demand over time. Wider zones indicate price avoidance, while narrower zones suggest more frequent returns to those areas. To understand trends, simply compare the price position to the previous day's zones. A break below demand signals a downtrend, while a break above supply indicates an uptrend. You may also encounter pullbacks in these scenarios. For example, in our strategy, we'll buy when the price bounces off the demand zone, signaling a potential reversal to the upside. Conversely, we'll sell when the price faces rejection at the supply zone. When adjusting the settings for the LuxAlgo supply and demand daily indicator, you'll find the threshold percentage, which determines how much of the visible range volume is used to create supply and demand zones. Higher values return wider zones, while the resolution setting fine-tunes the accuracy of the data, and adjusting the intrabar time frame allows you to set the time frame for more precise data gathering. Next, let's move to indicator number 2, the Relative Trend Index by Xiamen. This powerful tool measures the strength and direction of market trends by blending both trend following and mean reverting principles. It adapts to market volatility while minimizing the impact of short-term noise, making it far superior to the Standard Relative Strength Index. The RTI analyzes the position of the current closing price within its recent range, offering a more accurate view of market conditions. It's also highly customizable, allowing you to adjust sensitivity to filter out false signals. By widening the overbought and oversold zones, you can increase the reliability of the reversals. We'll set the overbought zone to 150 and the oversold level to -50. The RTI works by plotting a line centered around the 50 mark. When it's above 50, we're in a bullish trend, and when it's below 50, the trend is bearish. The further the RTI moves from 50, the stronger the trend. Now, let's put these indicators into action with a straightforward strategy that gives you clear entry points and sound money management. For a long trade, there are 3 key conditions to check. First, the price needs to return to the demand zone. Many traders buy here, causing a potential price rise, but don't jump in every time price dips. Our goal is to minimize losses. This is where the RTI comes in. The second condition is that the RTI crosses below the oversold level, confirming the market is truly oversold. Finally, wait for the RTI to move out of the oversold zone for the final confirmation before you open a position. If you prefer a more conservative approach, wait for the RTI to cross above its moving average for a stronger trend reversal confirmation. However, be aware that you'll likely enter the trade at a higher price. Set your stop loss just below the supply zone with a 1-to-2 risk-reward ratio as your target. For short trades, follow this checklist. The RTI must first leave the oversold zone, then it must enter the oversold territory, and lastly, the price should return to the supply level. Let me show you an example of a long trade. Notice how the RTI helps filter out losing trades, increasing the success rate of the strategy to 70% or even 80%. In this example, the market was oversold, confirmed by the RTI, and the price bounced off support. You can enter a long trade when the RTI leaves the oversold zone or crosses above the moving average. Test both methods and use the one that delivers the best results. Let's quickly test this strategy on Bitcoin. As you can see, these indicators are highly accurate with almost no losing trades. If you want to learn about another great strategy, make sure to check out the 2 videos that have probably just popped up on your screen. My free Telegram group link is in the description below, and I would love to see you join us. We get serious results every day of the week. Thanks for watching, and I'll see you soon.